All right, folks, back to work. Weekend is behind us. Let's make some more money this week, shall we? Well, we finished up the week last week with that big move down on Friday afternoon. Now, big moves are great because big moves usually give us big opportunity to make big money the next couple days, but you have to have the right strategy in these big move environments. In my trade room, we have a very specific game plan we use for these big move environments. We're going to cover the entire big move game plan in tonight's video. By the time we're done tonight, we'll have an easy roadmap, an easy game plan to make money anytime you see a big move like we saw last Friday. So chart's ready to go here. Enough of the intro, right? Let's go make some money on what should be a very busy day tomorrow morning in our trade room. S&P and SPY's already in front of me here tonight. Nasdaq triple Qs are already. I have three very important clues on these charts right now that are telling me where I think the winning trades are waiting for us tomorrow morning. Two out of those three clues are right here on the 60-minute, these hourly charts. If you recall, back during the election 2 weeks ago, we had that big move up into a trading range. Big move up into a trading range. One of three clues is a big move up into a range. Now, why is that important? Well, because ranges are where a lot of volume trades hands. Ranges act like magnets. So one big clue is we know the buyers are going to be trying to go back up into that range up overhead. The second clue, though, is more important than the first clue. The second clue is the size and the strength of that big move down we saw last Friday afternoon. Now, why is that important? Well, because anytime we see a strong move like this, we have to expect that all of that momentum going lower is going to try to retest that low before we get that run back up into that range up overhead. All of that momentum going lower, the bears will try to retest that low before we make our run back up into that trading range. So the second of three clues is the strength of that move going lower. Expect those sellers to put up a fight, try to retest that low before we make that run back up into that range overhead. Those are two important clues I see here on the hourly charts. Now, I have one, I think, just as important clue here on some faster time frames, because these 60-minute time frames, they're good at giving us the overall big picture, overall momentum, but they're not going to help us time the best entries for tomorrow. I have one more clue on some tick charts, help us time the best entries, wrap it all together, and make some money after a big move like we saw last Friday. Now, before we dive in, though, and talk about that one final clue, let's check schedule for tomorrow. We don't have any major news on the radar for tomorrow. None of this really gets me that excited here. We don't have any big news until Wednesday afternoon. We have very big report earnings coming out from NVIDIA on Wednesday after the close. So back to our charts, though. It's good to know when the news is, or the lack of news is, this week, but we all know the money is made by trading the patterns we see on the chart. I mentioned earlier this evening, we had that big move up into a range. That range is a magnet. That was one big clue. But again, the strength of that move down, these sellers are going to put up a fight and try to retest that low before we make that run going higher. Those are two important clues, but arguably just as important clue here is on the tick charts right now. We don't trade off time charts in our trade room. We use tick charts. Tick charts, by the way, all the time frames are in the upper left-hand corner here of this video. That is a 7,000 tick chart. This, by the way, too, that yellow line right there is the 21 EMA, in case you're tuning in and watching for the first time. There's one, I think, very important clue here on the tick charts right now, and that is a bullish move up into that trading range. Now, why is that an important clue? Well, first of all, we know that ranges act like magnets. More importantly, we know ranges love to rotate. They rotate up, down, up, down. Now, because this is a bullish range, we also know that range breakouts Those highs are very common as well. So final third clue here is that bullish range. So we get a bull range in the 60 minute, a big move down the 60 minute, and a bull range here on the tick charts. Put those three clues together, and I have three very simple trades I'm watching for tomorrow. I also have three more bonus trades we'll talk about a bit later on the Nasdaq. If you like making money, I would definitely recommend watch all the way to the end. Any questions, hit me up, of course, in the comment section below. The first one is that we know this range overhead is a magnet. We also know that sellers are going to be trying to take out that low. There's that low from last Friday. So one of the three trades I'm watching for tomorrow is going to be buying bear traps down in this area. If we run lower, this is not a great place to be selling. If you want to sell high, right? Sell as we go higher. This is not where I want to be selling. So if it's not a good spot to be a seller, it's a great place in an overall bull market to look for bear traps. Now, bear traps, I look for two types of bear traps. One is called a failure pattern. As we make our run lower, I don't know how far that pullback will go. It may go here, I don't know. I'm not in the business of picking tops and bottoms. What I'll do is once we get down into support levels down below now look and see if I can get sellers to come in and try a couple times. Let's use that failure pattern we talk about so much in our free video classes. Trap the bears in once, let them try twice. Why twice? Because now I know where their stops are and I can buy right into those stop losses. So as we go lower, one of my favorite trades for tomorrow is a bear trap down here as bears are trying to take out a retest of that low. Now think about this. The market now wants to rotate back up again. It'll want to rotate the amount below, the amount above going higher. There's an easy way to make more money on these failure patterns. Now add to your winners, right? Adding to your winners, I'm gonna look for what's called a technical trap pattern. It's a higher high in price, move right below that low. And my favorite type of traps are going to separate off that moving average. But a separation off that 21 EMA, that higher high in price, right below that prior low, strong green candle closing back above that 21 EMA. That is a gorgeous bear trap pattern. Targets, of course, now back up to retest the high and leave those runners because ranges, they love to rotate. That's one of three trades I'm watching after a big move we saw on Friday. Now, what happens as we go higher? We might get that nice bear trap down. We run up going higher here. Who's waiting up here? Sellers. Why sellers? Because we had that big move down from last Friday. So is this a good place to be buying? Of course not. It's the last place you want to buy right now. So because it's not a good place to be a buyer, it's a great place for a bull trap. Now, bull traps in this environment, we're a bit more bullish than we are bearish. If we run higher, I'm going to look for a technical bull trap pattern. I call these crown reversals in situations like this. It's very easy. I'm not going to pick a top on this because, again, it may keep on going higher. Look for those buyers to come in. Try once to keep it going higher, go lower, try twice to go higher. Now watch this pattern. It's a lower low in price. I'm going to go right above that prior high. Strong red candle closing below that moving average. That, my friends, right, that is a bull trap pattern. There's one happening right over there. We pull back, buyers try once, lower low, buyers try twice. We go right above that high. It's no surprise that sellers are selling that bull trap pattern. Again, I call these crown reversal patterns every morning in our trade room. Now, where does that market want to go? It wants to rotate back down again, right? The amount above the range, the amount below the range, that becomes my target. And once again, think about that same 1, 2, that failure pattern into that trap combination going higher here. So two of my favorite trades there after that big move higher, the big move lower from last Friday. We're selling bear traps, selling bull traps above the high. We're buying bear traps down below that low. Now I have one more trade I want to talk about. Before we do that though, let's slow down for a second. We've covered a lot so far in this video. I know most of you guys and gals watching right now, you know these patterns. You're making money with traps, crime reversals, and failure patterns. But if you're watching for the first time right now, this might be a brand new language I'm speaking, a brand new strategy you want to learn here. So not to worry, I teach the entire roadmap. I have a ton of examples of traps and failures. Guys, I cover the entire thing in a lot more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making a lot more money consistently each day. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples I share in that short video series, and it's 100% free. Also, to be aware too, guys, I'm going to put all the important links we talked about tonight in the description of the YouTube video. I'll put the free class links down there. Definitely start first with the free video course, learn the roadmap, start making money on your own. Keep in mind too, we trade together every morning at 8 o'clock Eastern time in our trade room. I'll put membership links there for you guys, description of the YouTube video. And also be aware too, I post the charts, videos, updates, mindset stuff on Twitter, or X as they call it these days. If you're on Twitter, X, give me a follow. Again, all the details you need to learn more about this stuff and hopefully earn a lot more are linked up for a description of this video. So where we leave off here now, we talked about how I want to look for bear traps right down below. We mentioned that crown reversal off the high. We know that ranges love to rotate back and forth. And again, we don't want to get caught buying it as we go higher here. The third and final trade for tomorrow, and again, I got some variations for you guys on the Nasdaq here a bit later on in this lesson. If we do break out, if we do get a convincing breakout, it seems unlikely right now, but hey, we are an overall bull market into that range. The market does want to go back up into that range eventually. It just may not get there very easily because the strength of that move from last Friday afternoon. Now, what do we do if the market does break out and run higher? There are 2 types of trades to look for. We break out of a trading range. The first one is basically a simple bear trap pattern. If we break out above the highs here and I start seeing separation above that moving average, one easy trade here is always a bear trap. It's a higher high in price, move right below that low, and a strong green candle closing above that 21 EMA. Now, this one obviously is a little more aggressive, right? Maybe a half size position on the initial breakout into that bear trap. Now remember, ranges, when ranges break out, they love to create measured moves. So 1 leg, 2 leg. That's usually where the final target goes on those breakouts into bear traps. Now, once I get that measured move completed, I do not want to buy up here. I want to buy nice and low. And the best way to do that is to look for what's ultimately a breakout pullback. We use what was resistance now as support. One of the most consistent things I know about trading is that when ranges break out, they love to break out pullback. Now, when I say breakout pullback, I want you to think about a 2-legged pullback. 1 leg, 2 leg. Think about a measured move. My favorites are a measured move that goes a bit too far. Now, obviously, I have no crystal ball for tomorrow. That's the roadmap, though. That's the formula for it, right? So as we go up, 1 leg, 2 leg, breakout, going higher. Then I want to see 2 legs on the pullback. That will give me now my area of support. I'm not going to blindly buy that area. I'm going to look for that same combination trade I talked about earlier here below the low of that range. I'll look for bears to come in, try once, try twice. I'm going to use that bear trap. I call these failure patterns in our free video classes to trap in those bears. And again, where's the market want to go? It'll want to go back up and take out that high. As we're going higher here, look for that separation off the 21 EMA, that higher high in price. And as always, if you want to make more money, add to your winning trades. An easy way to do that is that bear trap add-on. So the third and final trade on my radar for the S&P and SPY for tomorrow, and again, I got some bonus trades here for the Nasdaq here in just a moment, is if we do see this thing really start to push and run higher. Again, the most aggressive entry, I'll use a half size position on a trade like that, is that bear trap. That bear trap, again, is going to be that separation off the moving average, that higher high in price, a trap right below that low. A lot of examples of that inside the free video course. Be aware, these love to make measured moves. Once they do, we're not going to chase after it, buying higher. Now think about that two-legged pullback. That gives you now the general area. Not going to pick a bottom on that. We'll trap the bears in, think failure pattern, then into a technical bear trap pattern with that separation of the moving average, higher high in price, and that trap right below that low. Those are three of my favorite trades here for tomorrow on the S&P and the SPY here. Now, let's cover some variations of this now over on the Nasdaq because those are my favorite. Let's talk about what some variations of those trades might look like. Now, before we dive into the Nasdaq though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing to our channel, and sharing this link with other trading buddies. Guys, that makes a huge impact on my channel because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days, especially around the holiday season coming up here. I appreciate you guys spending a few minutes with me every evening on these videos. So thank you so much for the likes, subscribes, and all of your support. Now, let's get back to business here and talk about our Nasdaq. Same thing here on the NQ here and the triple Qs. Big move up into that range. We know that range overhead is the magnet, but again, sellers, they're going to put up a pretty good fight, I would imagine, and try to run this thing back down to retest that low before we get that run back up into that range up overhead. Nothing is new there on the 60-minute time frame on the Nasdaq and the triple Qs. Over now on the tick charts right now. Again, I think tick charts make everything easier. A 4,000 tick chart there linked up upper left-hand corner. And much like the S&P, it's basically a bull market up into a trading range. Same basic idea, right? Ranges act like magnets and they love to rotate back and forth like this. And of course, because we are a bullish range, we're more likely now to break out of that range going higher and use that breakout pullback I mentioned earlier on in this video. Now, I talked about earlier on the video, I talked about how I would love to get this price going lower because again, we know the sellers are trying to take out that big low from last Friday afternoon. But as we go lower, I don't want to sell low, I want to sell high, right? So selling as we go lower is not exactly a great place to be a seller. I talked about how I'd like to use a failure pattern. 1, 2, and squeeze those stops, right? Basically, if you're caught short and you get stopped out of your short trade, you're buying your way out of that short position. That's why failure patterns work so well. But one variation of that is we may not get that pattern. Oftentimes what happens is we'll get that run down. There'll be so many buyers underneath these prior swings, and we'll just simply whoop and run right back up into that trading range. These can be very difficult on our patience and our discipline because if we don't get the entry right here, it's very tempting to want to chase after this thing as it goes higher. What I always do in these kind of V bottom situations like this is after it V bottoms like this, it'll almost always begin to grind and begin going higher. That grinding motion is always an easy giveaway because now I can mark a trend line off the highs. I can bring that trend line down at the lows, create that channel. Now, watch closely. Look left, find one of these prior swings that lines up around the low of that channel. And whatever you do, don't miss the first touch. The first test is always the best test in these V-bottom situations. Now, I love traps. If you guys are in my free video class, you know I love traps. So traps are great. Failure patterns are great. Pullback combinations. Unfortunately, I can't go over all the entry patterns in this short YouTube video. But again, that free video course I mentioned earlier, all the links you'll need in the description of the YouTube video, that free video series will teach you all the entry tactics we use every morning in our trade room, give you a better chance at time of the better entries on that V bottom. So that's one variation. That's one variation if we don't get that bear trap off of that low. Now, that V bottom works the same way as a V top overhead. I mentioned earlier in the video tonight, as we go higher here, I'd like to use that bull trap, right? Trap the buyers in once, trap them in twice, get that lower low in price, right above that high, strong red candle, right? Same rules I teach inside the free video course. I love the idea of that bull trap pattern, again, that crown reversal off that high. We may not get that up there. We may go higher here, and there may be so many bears up there, because again, those bears are going to try to retest Friday's low. There may be so many bears up there, it might get whacked right back down again. This is exactly where a V-top reversal comes in hand. Now V-tops are similar. They'll V-top off that high. They'll begin to grind going lower on this. The hardest part about these is not chasing after it, right? Because you're looking for the entry short off the highs. You don't get it. Your emotions are firing off, right? Chase it, chase it, chase it. We don't want to chase these things going lower. What I'll do is I'll mark a trend line off the lows this time, bring that trend up top here, make that channel top. And again, I'm going to mark off these prior swings up here. I want that first test off the top of that bear channel. This could be a bull trap, like I'm showing you here. It could be a buyer failure pattern, a pullback combination, any of the entry patterns you guys are learning inside the free video course. That's one more variation right off that high. Again, it's a bull trap, but it's a bit different variation than that crown reversal I mentioned earlier on in this video. The final one here now, is I mentioned earlier in the video, a breakout pullback, right? A breakout and a pullback going back around. Again, what was resistance becomes support. We talk about how, right, that two-legged pullback gives you the general area for it. We trap the bears in. I mentioned that earlier here on the video on the S&P and SPY. Oftentimes what happens though is one variation of that breakout pullback is oftentimes we'll see a breakout, but it doesn't really give us a real strong, convincing breakout. It'll break out and begin to grind going higher. These pop and grind breakouts are very common across all markets. If you know how to trade a V top or a V bottom, you know how to trade these as well. So we mark off that trend line off the high, bring that channel down at that low, look left here now, right? Find those swings. Now again, I would love to incorporate the prior tops on this. I'd love to use what was resistance as support, but the most important thing now will be finding that new channel off the highs, making that channel low look good, getting that pullback, that first test. Now again, it could be a bear trap below prior swings. Oftentimes we'll get below the 21 EMA. That's where failure patterns live. Failures, of course, turn into pullback combinations. Now, one cool thing about pop and grinds like this is the size of that pop leg is the measuring leg. So I may not know how big it is right now, but if we see a pop-up that begins to grind going higher tomorrow, the size of that pop-up leg, that's the measuring leg. Once I get that pullback off the highs like that, now I know I can anchor the size of that pop-out leg, I can anchor that now off that low. That will now tell me now where to leave that runner. As always, one of the easiest ways to make more money is don't trade more often. Don't dilute your trading activity. Get better at holding on to runners a lot longer and understanding how breakouts work, measured moves work. The breakout leg is the measuring leg. We mentioned that earlier there on the S&P and the SPY as well. So a third trade, a variation of a breakout pullback, is a pop and grind breakout. These will soon become one of your favorites. Anytime you see it grind up like that, find that channel, right? Find that channel and don't miss that first test off that low, bear trap, failure pattern, pullback combination. And again, a lot more examples of those trade setups to talk about tonight are covered inside that free video series. So now you know my roadmap for tomorrow. Big moves give us big plans or big opportunities to make big money the following day. That's the game plan for tomorrow. And don't forget, guys, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The easiest way to make money in these markets is to learn and trade along with me every morning at the opening bell in our trade room. I'm going to put all the important links you'll need, guys, to learn more about membership. Again, the free class links are down there. Start first tonight on the free video course. Learn the roadmap. Everyone loves the free video series. A lot of great examples of traps and failure patterns I include in the free video series. And again, come trade with us every morning at 8 o'clock Eastern time. I'll put trader membership links there for you as well. Description of the YouTube video. Guys, fantastic day today. More good stuff coming tomorrow. Hope you learned a bunch in tonight's video. Hope you use this knowledge to earn a bunch tomorrow as well. And hopefully I'll see you sometime soon trading with us, 8 o'clock Eastern time in the SOT trade room. As a member, in the meantime, be well out there. Be nice with each other, will ya? And be here next time. Adios, amigos. Bye for now.